Online broker platforms, index trackers, how to navigate what can feel like an overwhelming site to find the index trackers you want, how to know they're good for you, and how to know what criteria to look at. So in this video, I'm going to take you through two platforms. One is a popular UK online brokerage platform. One is a popular South African online brokerage platform, and show you just what are the criteria to look for. How do you search for what index funds would be available to you? How to then drill down to see what's important and what's not. And so you can choose those funds and get over one of the biggest barriers that prevents people from moving forward: overwhelm and this fear of getting it wrong. So let's dive on in. So this is the Hargreaves Lansdown platform. It's for all of you in the UK. Many of my FF viewers and the insiders in the Welsh world use this platform. It's not the only online broker. There are many others in the UK, and I've got other articles about how to select your online broker. You could be using Vanguard, Interactive Investors, Interactive Brokers, AJ Bell, and so on. But this is a great solid site. So now what you can do, you can either use the search facility, but I'm going to use their funds selector to show how you can navigate down. So we go to their funds. We literally just said, I want to go onto funds. And now you can start searching what we're looking for, because absolutely we're investing in index tracker funds. So the first thing, you only want to look at index tracker funds. We're not interested in actively managed funds. So you go tracker and you click that as one of your criteria. Now the unit type there's two key differences. Generally, we want to have accumulation funds. This means that the return, the growth of your investments, the dividends that get paid out are automatically reinvested. This is one of the key rules of wealth, reinvesting your investment returns. And what better, where you can have it automatically done for you by the fund. Now, don't worry if you're in a country or on a platform where you don't have an option for a whole lot of what are called accumulation funds, then you just go for what's available. But when you have the option, generally we want to choose accumulation funds. So you'll choose that. Now, we don't worry about what provider we're looking for or more filters. We're saying, great. Now the sector says, what is the area that we want that index tracker to cover? And our starting point is always going to be the World Fund. So we don't worry about this at the moment. We're rather going to type in World. And you'll see it's going to give you a list of funds. So you say, well, let's look at those 11 funds. And it brings up a table that shows you the funds that have World in it. Now, I've got another article that tells you the difference about why a World Fund is the best way to start your index tracker investing. And generally, where a title is just World, it usually means only developed market, whereas all world or global would make a difference. But so you'll see here World, that generally means developed market only, and then all world would include some emerging markets. And you could also type in the word global and see what that brings. And let's see, it's brought in some interesting different ones, which is actually not what we want. So let's stick with all world. So we can now come down here and go, well, what do we want what are the important criteria we want to look? So it's told us labels, we know they're all accumulation funds with a key put, and now it tells us low charges. The costs are one of the few things we can control. Our contributions, we can control our selection, and we control our costs. So we want low costs. So the next thing we want to look at is charges. And we say, sort by ongoing charges. This total expense ratio or your ongoing charge is the most important criteria, because remember, the more money that goes to the financial industry, to your financial advisor, etc., the less money that comes to you, and it rarely matters. So if we search by just ongoing charges, we can see that this legal and general world, future world, is the lowest cost fund. We can see Fidelity has one as well. Now, any fund that's like under 0.2% is fantastic. All of these would be great funds for you to invest in. When you consider that many actively managed funds have charges well over 1%, and sometimes when you then add in your financial advisor and so on, these charges are adding 3, 4, 5%, which have a significant impact on your future wealth. We know that this is already super sexy. So just looking at this, it already tells you that they're all pretty good. So let's say, okay, Legal and General, Fidelity or HSBC, All World, let's go and have a look at this. Now this one you can see, this is just developed world, excludes the UK. Now there might be reasons to do that, but as a starting off fund, we're just going to choose an all world index. So now we go, okay, here's Fidelity or any of these three, and we can now go and actually look at the next step is say, well, of these top three, any of these will do. Let's go and just look at what's called the fund fact sheet. So I'm going to go into this Fidelity, and the key things to look at is to say, great, no performance fees. Those are all of those things you should never have on any investment. So that should be a standard in your index trackers. Nice low ongoing charges, you just confirm that. And you see that this one, you're going to own shares in 1,500 companies with a single investment. How cool is that? Pretty darn sexy. Now at the fund, at the beginning here, you can also see, what is the purpose of the fund, what is the track, and so on. And so what is really key is you come down and you go, yes, it's available for a regular savings plan. Fantastic. You can invest in this from as little as £25 a month. You just do this on a regular basis. And now here it shows you what are your holdings. So the holdings just mean what are the investments that this fund holds. So these are going to be your big top, what are called your big mega caps, because they represent the biggest part of the world market. It shows what are the top sectors. Yes, you've got technology, you've got software, you've got pharmaceuticals, and so on. And then which countries. The USA is always going to be the primary, your largest percentage in any global or world fund, because the USA is the largest and most liquid stock exchanges in the world. And so you'll see by getting a single world fund like this, you're automatically getting this fantastic spread across the world in the proportion of those markets. And so that's really the only information you need to know. Now you could go back and say, well, what about let's see, is there any other key information? If you want to go a little bit further, you can click on some of these other tabs. And so one of the interesting ones for you might be just looking at, where's the spread? You'll see it's predominantly an equities fund. That's what we're wanting. It's invested in stocks and shares. And again, there's your top holdings. And you can see where is this invested. So the technology in the UK or real estate in what country and so on. Really not that important, but it can sometimes be a bit interesting. Other key information would be, can you invest in it in things like your SIP and your ISA? And this says, yes, absolutely you can. So this means you can take advantage of those tax efficient investment mechanisms. And that's all you really need to know. And now we can go back to that table and go, let's compare this with that other fund. Where we're coming back to, it looks like we're going to have to go back. And we said another great one for our world is the FTSE All World Index. Now we can go and look at that fund and go, okay, great. Also fantastically low cost ongoing charges. Very similar. Now here you'll see there are significantly more companies in this fund. And the differences here is the previous fund we looked at was a developed world only. And this is now includes the emerging market. So from a single investment perspective, you're getting more shares in this one. So if you're only going to have a single index tracker, in your portfolio to just start getting invested in, an all world or global fund is absolutely the way to go. So you can bring in some emerging market. Now look, the large proportion of your portfolio is still going to be in this developed world, in the same investments, but you'll see here, now you're going to be getting some exposure to some developed world and going to get some exposure to the emerging market world, specifically China, but not a big percentage, but at least you're getting a little bit more of a spread. And so really between those two, a great good starting point, nothing really between it. The only difference is the one was a world index, which essentially only represents the developed world, versus this all world index. So that is it if you're in the UK. I hope that has given you some great insight into understanding fund fact sheets, navigating online broker platforms, just made it a lot simpler. And then of course, once you've got your fund, you set up that regular investing and you get into the market. Let it be easy, let it be savvy, let it be simple, and get your money working hard for you. I'm Ann Wilson. If you're watching this anywhere over at thewealthchef.com, head on over there and let yourself be wealthy.